So today we're going to help you understand your balance sheet a little bit better. This is a great tool that you can use to really get a better view of like the full picture of your business. And so we've already covered profit and loss or profit or loss. Um, and that'll give you a really in-depth look as to like where you're spending the money, but then loans and things like that and the true financial health are going to be over here on the balance sheet. I just kind of want to go through a lot of these little segments here and show you the important ones and some that really can help you fully assess your ability to be able to pay back loans and make sure that you're profitable. If you are on portfolio, this gets looked at by Nicole and Jenna, our CPAs, at least once a month when they do your books. And so it's standard practice that once they balance out your books and do everything, they take a look through your P&L to see any abnormalities, and same thing with the balance sheet. And then when they go in and they book depreciation and everything, you begin to see this stuff. If you don't know what I'm talking about, it's totally okay. If you're on portfolio, these girls, they have it covered. They are phenomenal CPAs, and they have some incredible bookkeepers too. If you're not on portfolio, you're welcome to talk to our accountants as well. You can find us at lotuspe.us. If you are on portfolio, your coach can also give you some more insight if I glaze over something, right? And so what is a balance sheet, right? And so this is going to tell us the business's financial health over a period of time, right? Like at any given moment in time. And so basically it's assets equal liabilities plus owner's equity. And so what does all of that mean? Assets, what do we own, right? What do we have? Do we have a property? Do we have tools? Do we have vehicles? Like what do we have? Machinery in this one, right? Cash is 100% an asset, right? It's a liquid asset. Liabilities, right? How much do we owe on all of that stuff, right? We've got a building worth $1 million. We've got a $500,000 loan. We've got a vehicle worth $80,000. We've got a $30,000 loan, right? So, assets, liabilities, and owner's equity. After we go ahead and we take out any liabilities that we have, what do we have, right? What do we have at the end of the day? And so the significance of a balance sheet, right? Why is it crucial to understand this stuff, right? Solvency assessment. Can we pay our debts, right? Can we pay our debts? It's not just about credit score, it's about cash flow, right? Do we have money coming in? I know in a prior video I talked about taking loans. Like we'll try to take loans before we go and we pay with cash out of something. If I'm going to go buy a new vehicle or something like that and it's $50,000, I'm not going to take $50,000 out of my bank because then I'm losing interest on that. I'm not keeping it at like TD or something. We send it over to a financial investment firm and they have different accounts, and so you can even get in some cases 4.5–5% on cash that's guaranteed, or they can invest it over a longer period of time, and then based on your portfolio you'll determine your amount. But you shouldn't be paying for things out of like just solid cash because you never know when you're going to need it. So solvency assessment, right? Tracking of financial health, right? Where are we strong? Where are we weak, right? Comparison over time. Are we doing better this year than last year? What's moving the needle in either direction, right? The needle can move up or down. And then navigating the balance sheet, right? Assets, again. So this talks about like what we actually own, tangible assets, fixed goods, right? Or not fixed, like things that we can touch. And again, cash, right? Accounts receivable as well. Accounts receivable, if I am going to purchase a company, I don't really care so much about accounts receivable. I mean, I do, but I would look at like the history of the payer. I would look at like what it's receivable for, how long. Really anything over 60 days, I don't even look at that at all. We bought a business one time. He had something like $60,000 in AR that was over 90 days old. That deal is done and gone and closed on 2 years ago. We never collected any of that 90-day money, and so accounts receivable, it may look nice on paper, but when is it, how is it, and so just be careful of that. But most of our businesses, you're not really taking AR at this point anyways, because it costs us too much to do that. Send them to a bank. And so liabilities, what do we owe? And again, we kind of get back into this, right? Owner's equity, what do we have after we pay everything, right? And so current ratio, this is basically your ability to pay down like any short-term obligations, right? Quick ratio, this somebody call, it says it right here, acid test ratio, right? So sometimes you'll hear that. So this is basically our ability to pay debts quickly, right? Do we have cash on hand? Can we pay these things? You kind of see this. You kind of see this flow here, right? You need the money, right? You need money on hand. And then so equity to assets, right? What is your ratio, right? How much of it do you own rather? And so one of the things that we quickly look at too is retained earnings. So when I'm scanning down, if somebody first sends us financials before Nicole and Jenna go and they start digging into that stuff, I want to know how much cash you have on hand. I want to know what your assets are, and I want to see what your retained earnings are. I can quickly from 30,000 feet above look at a balance sheet and tell if your company is profitable or not, and it's something that we want to get involved in. I can tell you that most of the deals that we've been involved in, we made the decision in the first probably 20 minutes after speaking to them, right? So we do about a 45-minute interview, and then from there, once we look at the financials, we have, we know if they're right or wrong, in terms of like if somebody's telling us the truth or not. And in some cases, these will just give us areas of opportunity too. So in any event, you should really get good at understanding what all of this stuff means on your balance sheet. If you're not on portfolio, should work with your accountant or call our accountants and work with them to begin to quantify what all this looks like and then move the needle in the right direction. And if you're on portfolio, you're already in good hands. You're in the best hands. And so I'll see you in the next video.